Talk to me a little bit about the ETN that you had to close last week.
Yes. It's an exchange traded note.
Yeah.
I want to go back to the literature because I've had to read the prospectus myself. And it says a number of very important things. It says that this is a daily trading tool for very sophisticated investors to help them manage their daily trading risk. So it's really, we also say that your ETN has zero long-term value. It's the first time I saw a prospectus that says that a product has zero value. And we also say that it is not an appropriate investment, and you should not invest in it for any period of time superior to 1 day, because you risk losing all or a substantial portion of your investment. That's the language in the prospectus. So it's a tool used by hedge funds and sophisticated investors to manage their risk intraday.
Right.
So
it wasn't sold to wealth management clients or retail clients?
Actually, we don't sell it. We manufacture it. Right. There's a third party who sells it, and we sell it to market makers only, and we are not a market maker in the VIX. So really, that's all we can say about this. The prospectus is crystal clear. It is not a proper investment vehicle. It's a risk management tool, and we say, black and white, this should not be used as an investment vehicle.
Why did it blow up so quickly?
Oh, it's because of a formula. When the VIX went from, it's the inverse of the VIX. So when the VIX went from 17, to give you some numbers, to 38, let's call it, the value of the instrument went from 100 to 5. And the reason then we close it is that there is no prospect of recovery. If the VIX went back to 17, from 38 to 17, the value of the product will go from 5 to 10. So once you hit that bottom, the structure of a product means there is no recovery, which is why it was from the start in the prospectus that should the product lose more than 80% of its value, we're allowed to close it. Everybody who holds it in the market understands that that's the nature of a product, because it doesn't work anymore. And when the conditions to withdraw it were explicit, it will be trading until February 15. So we didn't just close it, and the investors will be paid on February 21st. So all that was laid out in the literature of the product.
So the rationale makes sense. Do you think there'll be more products like this or less products?
Well, I think there are quite a few products like this in the market. It's interesting. At least one other bank made the same decision we made that night, and it was actually to protect investors because the product stopped trading. It was quasi impossible to price, and we needed to give certainty to the market at the market open. So before the morning, and we went through a long process. We don't make those decisions lightly. There are people involved from every aspect of the business, from compliance to the front office, and they collectively, I don't make those types of decisions, they collectively reached a decision which was in the interest, we believe, of investors, which was to close it. But there are quite a few products like that in the market because they serve a useful purpose. They allow market participants to manage their risk better.